Welcome to this DW Business Special, where we're asking, will a cap on Russian oil prices work? Since its invasion of Ukraine, Russia has been able to fund its war by selling its oil around the world. But now, the G7 group of advanced economies says it wants to put an end to that by limiting the amount of money Russia can make. The likes of the UK, US, Germany and Japan plan to cap the price they're willing to pay for Russian oil. So will the cap work? How high will they set it? And will other countries come aboard? To answer these questions and more, I'm joined by Professor Jeffrey Sonnenfeld from Yale School of Management. He and his team have been carrying out unparalleled research into the impact of the war on Russia's economy. It's great to have you with us again, Jeffrey.
Rob, it's fantastic to be with you again, and I just love that introduction. Thank you very much.
I hope it summed things up well enough. And let's get straight into it. Why does the G7 believe that there is a need for this cap on Russian oil prices?
Yeah, that's an excellent question, because the status quo is not that bad. You might wonder, because the status quo, some are saying, well, Putin has set himself up as this great savvy world energy czar, smirking. And the reality is he's not, is in fact, there, as we have spoken before, the gas is not fungible, and the gas that is not going into the EU can't pivot and go into Asia because, as you recall, and we spoke last time, the pipelines needed to transport vapor gas, which is all Russia produces. They don't produce liquefied natural gas that can be shipped. It has to go through these pipelines. Those pipelines don't exist. One little creaky one. But so 86% of their gas that was going into Europe, now they can only get a fraction of it in there. So Gazprom is down by a third, and they've got problems on that. Meanwhile, the EU has all the gas they're going to need. It's going to be more expensive gas, but there's no limit. It's like saying that there are plenty of cars that happen to be Mercedes rather than Kias. They're more expensive because it's liquefied natural gas, a lot that's coming in there, but already Germany, which was, say, pulling in about 43% of its gas from Russia, is now getting less than 10%. It's mainly from the US and Norway, and it'll be a lot more soon. And as we already know, we're already at 85% of our winter storage is already there, way before we were last year. But your question is about oil. And
Indeed,
with
yeah.
oil, people are saying, yeah, but people are still Russia's still making money off of oil. And so that's why your question is a good one, because in fact, they're not making that much. What's wrong with the status quo? They're a very inefficient producer. And the only places they can sell the oil right now largely are India and China. And India and China have gotten such big discounts that they're pretty much working just about break even. So while the revenues are higher, the profits are not. Well, the reason then that the status quo won't work, because I kind of like the status quo, is that we have sanctions coming in, which will stop all crude oil from being sold then in EU and elsewhere by December 5th. And then we're going to have, by February 5th, all refined products of gasoline and things like that, of petro products. So that could lead to some oil shocks. So this is a very smart move to try to figure out, how do we allow for the fact that the oil will flow elsewhere, but we're going to put a cap on those prices. And there's a real incentive then for the rest of the world to enforce these oil caps. So that's the reason why, because of what's coming on December 5th.
How's the cap actually work in practice, though? How do you make sure that companies are only spending a certain amount when they buy a barrel of Russian crude?
Well, it's we know what a country is paying for it, and a shipper, a maritime insurer, all the traders, all the people who handle the third-party logistics that make that possible is, I don't know, 90% of the fuel that's being shipped is on EU or UK ships, and certainly financed, insured by EU or UK maritime insurers, and they're going to be subject to these laws. Some skeptics would say, oh, that won't work. Oh, these are the same skeptics who said it wouldn't work for all kinds of other anti-terrorism sanctions and things like that, where every financial institution was held to it, and those who cheated were held criminally responsible, and they now toe the line. So we have a good history for enforcing this, and it's the third parties that'll enforce it, and they have a very strong incentive to do so. And we have a great history of showing it works.
Yeah, we'll talk about those skeptics that you just mentioned in a moment. But what has Russia's response been? Well, President Putin insists that such a move by G7 nations, who are already struggling with high energy prices, would backfire back on themselves.
We will not supply anything at all if it is contrary to our interests, in this case, our economic interests. We will not supply gas, oil, coal or fuel oil. But those who are trying to impose something on us are in no position today to dictate their wills. They should come to their senses.
Jeffrey Sonnenfeld, should we take President Putin at his word there? Could Russia simply stop supplying its oil to the G7 and countries that also participate in this?
If there's a big top line message from our discussion this morning, Rob, is that nobody on the planet should ever take President Putin at his word on anything other than perhaps that his name is Vladimir Putin. Everything after that, you shouldn't believe. He invented his GDP number and concealed, as we talked last time, concealed all of his national income statistics to support it. So now the IMF and everybody else realizes that they were duped. That's a fake number, and his currency, the ruble, is just an arbitrary number he assigned. It's not a traded currency. And on this front, he's trying to present himself as if this is a supplier's market. He's the oil supplier. It's a buyer's market. He knows that, but he's trying to weaken EU resolve, EU unity by suggesting, oh, you're going to suffer. This is not going to lead to increased prices. The whole idea of a cap is that it's imposing lower prices. If he says,
President Putin isn't the only one saying this, is he? I've heard people comparing this as, going into a shop and demanding that the shopkeeper sells you their products for less. I mean, could this actually result in driving up prices in the wider oil market?
And this is what happens when you have open bargaining, is sometimes set prices don't work. So, in fact, any skeptic who said that to you should realize that in 2 weeks, the back to school bargains will be everywhere, because everything's going to be discounted, because consumers are not paying the premium September prices, late August, early September prices for the back to school goods, that in fact they get reduced. The prices aren't set, and consumers, sometimes it's a buyer's market, as it will be with out of stock merchandise in your retail example. And that's how it's also going to be with oil, is he has to sell it more than the world has to buy it. It's 60% of his cash starved revenue, his nation, especially with this war machine he has to fuel. The only thing that Putin should hope for is that somehow the Russians develop an otherworldly capability to not be poisoned by drinking oil, and that he himself, because that's all he's going to have. If he refuses to sell it, he better be pretty good about drinking it directly as a beverage, because they need this. They need this way more than the rest of the world needs it. He has to sell that fuel. And he can't just stop selling it. It's, again, 60% of his revenue. If he shut down those wells, we're still, because of where we shut down wells, even in the U.S., and shut down some pumping because of March of 2020 reduced demand during the peak of COVID, we are still bringing some of those wells back up. And this is with far superior technology here in the U.S. than he has in Russia. If he shuts those things down, it's going to be years before they could even get back into it. So it would be devastating for them. They can't take their toys and leave. He can't take his ball and run. It's not his ball game. So that's what it's a false premise he's working off of.
Okay. Well, since the Russian invasion of Ukraine, Western nations have, already been dramatically reducing their consumption of Russian oil. The United States has banned imports, and perhaps more significantly, the EU is phasing in an embargo. However, as Professor Sonnenfeld already mentioned, other nations have been taking up some of the slack, notably in Asia. China's imports remain consistent. Meanwhile, India is importing considerably more Russian oil than it was before the invasion. It's gone from basically none to close to 1 million barrels per day. So, Jeffrey Sonnenfeld, can a price cap on Russian oil work without the likes of India and China being on board?
India and China will be some of the most enthusiastic proponents of this, because what they're, as the Indian energy minister just said this week, he said, we'd be interested, but not for reasons perhaps of global morals. We're interested in what's the moral comparative we feel is how do we get the cheapest energy for India? So it seems
so this gives them
vulgar,
more bargaining
but
power. Is that what he's referring to?
yes, they get the energy cheaper. Why would they possibly want to pay more? They have absolutely on our side on this. And by the way, again, just because Russia is selling more to India, that was temporary. All Indian storage is now capability is almost filled. China is still buying this week, but Russia has tapered off this week. They don't have any place to put it in closets or drawers or people's desks. They kind of run out of places to put, and they can't believe they're getting it so cheap because it's so much a buyer's market that India and China have exacted a $35 a barrel discount on oil, which is selling for 80 some dollars a barrel right now. If you believe Putin or you believe JP Morgan's energy analysts, we'd be paying $400 a barrel for energy right now. And guess what? They were wrong. It's around 80, 82, 83, $84 a barrel. So with a $35 discount, they're paying $50 a barrel to get oil. It costs Russia $44, $45 a barrel to extract it. They're break even. They're so inefficient. Yes, Russia is OPEC's third largest energy producer, and they are the least efficient. Venezuela, amazingly, with antiquated technology, is a more efficient producer. It costs Russia twice as much to pull the oil out of the ground as it costs the Saudis. The Saudis is $22 a barrel. So they're not making very much money right now, but they're making something, and they need that something.
Actually, some of the things you've said there are also what I've heard echoed from the United States government, which is really leading the charge with the price cap plan. Let's hear why the Americans think it is such a good idea. Let's get the view from the White House.
A global price cap will help us accomplish our two goals. The first one is significantly reduce Putin's biggest source of revenue for his war chest. Number two, ensure that oil continues to flow into the market at lower prices and supply meets demand. The impact of our efforts to implement a price cap is already bearing fruit. Reports show that Russia is already offering steep discounts, as much as 30%, and long-term contracts to some countries. This also demonstrates that Russia is planning to continue supplying its oil and willing to swallow bigger discounts.
Russia is willing to swallow bigger discounts and actually to accept less money for its oil, which I think is what you've predicted it would happen in the event of a price cap, and how it would have to accept less from the likes of India. But what I want to ask you is, when it comes to actually setting the price cap, how do you go about doing that? Presumably you don't set it at below Russia's production cost.
Well, as you know, there aren't many bigger critics of Russia on the planet than am I. However, I'm almost worried that it would so discourage them. We have to make sure, exactly to your point, Rob, that we allow a little bit of incentive, a little bit of profit for them. But Russia is so bad right now. It's hard, even though the top line revenues are there, it's hard to ensure them just barely enough of a profit so it's worth it for them to do it at all, because right now it's quite slim. So if we're looking at a $46 a barrel cap, which is being discussed, or somewhere in that vicinity, that's a very thin margin. I don't think we could go any lower than that. It's very close to the break even for Russia. I should also point out that Russia pulling it out of the ground at $44 a barrel, or a little bit more, is very expensive, but they still have to pay the shipping costs to send their oil, to get it into the EU. It's maybe 1 to 2, perhaps 3 days to get it to these ports in Asia we're talking about. It's 34 days. That's a lot of expensive time and shipping. So that also erodes that tiny profit margin. Russia,
if you're going to cut the profit margin down so low as to make it almost financially unviable for the Russians, why not just ban imports of Russian oil?
Because we still want it in the global marketplace. Why take that supply away and drive up OPEC pricing? This way, we very effectively reverse. I think OPEC could be a little bit nervous. People have wondered, why hasn't there been a buyer's cartel for years? Because we've had this fairly effective sellers cartel with OPEC. So I think we saw a little bit of inconsequential maneuvering by Saudi Arabia and the OPEC, some of the major OPEC producers this past week, but it was very tiny. But you could see that they chafe a little bit at just how effective a buyer's cartel can be. There'll always be a little bit of an incentive to cheat, by the way, in any cartel. That's always the case, but it doesn't matter. Everybody's prices still are coming down dramatically, and we just should give them, we don't want to cut off 100% of Russian oil in the market. We just don't want Putin making any money out of it. And this is China, of course, has come to this realization. China knows they'd love to have Russian oil. There's no evidence any longer that China is any backer of Vladimir Putin. We've just seen some of Russia's top physicists last week were imprisoned for espionage on behalf of China. And there are a couple other frictions that you perhaps have seen in the geopolitical flare-ups between Russia and China in just the last 10 days that are quite noteworthy. So there's no patron saint of China protecting Russia the way they've protected North Korea.
Okay, well as a proposed cap on oil, Russia may soon have to have its ability to make money from gas curtailed as well, as Professor Sonnenfeld was also mentioning up top. The EU was its biggest export partner before the war when it came to natural gas, but EU ministers have now been meeting in Brussels to discuss putting a cap on the amount member states pay for Russian natural gas. The bloc has already significantly reduced its gas imports from Russia, and Moscow has been gradually choking off its supplies as well. It just halted supplies down a key pipeline, Nord Stream 1. Indefinitely as well. So, Jeffrey Sonnenfeld, can Russia afford to fight this on both the gas and the oil front?
Russia has no leverage to fight on either front. On the gas front, shutting down Nord Stream 1 as he has, there are still two other pipelines, as you know, that are getting ample supplies of Russian gas into the EU. If those two were shut down, it's still not an issue. It's only we've just, since you and I have had conversations this spring, it's fallen from 46%, 44%, 44 to 46% of German and pretty similar for overall EU supplies of gas into Russia to now less than 10%. If you were to cut off that 10%, that will very easily be replaced by liquefied natural gas that hasn't even yet started to go into Germany from the U.S., from Algeria, from a lot of other sources that have LNG shipments ready to go in there. Germany brilliantly started these 6 conversion plants, massive conversion plants from liquefied natural gas, LNG, to be converted into the vapor that goes throughout the EU. It's a crisis is worrisome if people don't pay attention to it. Having the 6 months notice, we now see that Germany has been building these plants immediately. They were not even on the drawing board. It's incredible. This is going to be one of the real miracles of infrastructure, that these massive conversion plants will be done in December. And by the way, the 15% voluntary rationing that the EU agreed to surprised all of us. Spain and Portugal didn't have much incentive to go along with this. And of course, a lot of times we've seen independent streaks in Hungary and Turkey. And a lot of the media, and frankly, a lot of political scientists were shocked that 3 weeks ago yesterday, the EU unanimously adopted that 15% rationing, which may not even be needed. But these are like wartime maneuvers for efficiency. So this is where the EU is in great. I'm not saying it isn't going to be more expensive, but it's not going to be a cold winter. It's going to be a little bit more expensive and hard on certain heavy industry because of what it's going to mean for the pricing of energy short term.
Okay, Professor Jeffrey Sonnenfeld, I know you've got to head off now, so I will thank you most heartily for fielding our questions here on this DW Business Special. Thank you to everyone also who's been watching as well. Special thanks to Jeffrey Sonnenfeld from Yale School of Management. And also do remember to check out more of our videos here on YouTube if you've enjoyed this one. May I humbly recommend our latest edition of Business Beyond, which is on how to make money in the metaverse. Until next time, thank you very much and take care.